Hi, Professor Kabir. How are you? Assalamu alaikum. Uh, I'm unable to listen you. Can you hear me? Can you hear me?
Assalamu alaikum, sir.
Hi, Professor Kabir. Can you hear me? Hello. Can you hear me, Professor Kabir? But we are unable to listen you.
Can you hear me now? Hello?
Now it's clear.
Now it's clear. Okay.
Yeah, give me 1 second. Give me one.
Sure.
Second. Yeah, thank you very much for your time. And how are you doing?
I'm doing all right, but I made a mistake. It's 11 p.m. at night in New Orleans.
Yeah, it's midnight.
Almost.
So we formally start our session.
Yeah, you can, inshallah.
Yeah, I welcome you all in this webinar on Islamic finance, a value-based alternative. And first of all, good morning to everyone in Pakistan, and good night to Professor Kabir, because it's midnight with you. So our resource person, before going to formal start of our webinar, I would like to introduce our resource person. Our resource person, Dr. Mohammad Kabir Hassan, is a professor of finance in the Department of Economics and Finance, the University of New Orleans. He currently holds 3 endowed Chairs-Hibernia Professor of Economics and Finance, Hancock Whitney Chair Professor in Business, and Bank One Professor in Business in the University of New Orleans. Professor Hassan is the winner of 2016 Islamic Development Bank Prize in Islamic Banking and Finance. He received his BA in Economics and Mathematics from Gustavus Adolphus College, Minnesota, USA, and MA in Economics and Ph.D. in Finance from University of Nebraska-Lincoln, USA. Professor Hassan is a financial economist with consulting, research, and teaching experience in development finance, money and capital markets, Islamic finance, corporate finance, investment, monetary economics, macroeconomics, Islamic banking and finance, and international trade and finance. Professor Hassan is member of Accounting and Auditing Organization for Islamic Finance Institutions, Ethics and Governance Board, and Education Board. He is also member of Oxford University Said Business School Faith-Based Investing Initiative Advisory Board. Professor Hassan consulted the World Bank, IMF, Islamic Development Bank, African Development Bank, and many governmental and private organizations. Moreover, Professor Hassan has over 3 decades teaching and research experience, and he has published over 350 research papers in top reputed journals, like few of them are Journal of Banking and Finance, Journal of Corporate Finance, Pacific-Basin Finance Journal, Quantitative Finance, and he is a frequent traveler, and he has presented over 450 research papers at professional conferences and has delivered 244 invited papers and seminars. For his outstanding research and scholarly work, Professor Hassan has been recognized with with lifetime advancement award by UNO Research Council in 2019. Professor Hassan has already supervised 64 doctoral theses and acted as an external examiner of 49 dissertations from different countries of the world like Australia, New Zealand, USA, India, Bangladesh, Malaysia, and Canada. Furthermore, he has edited and published 17 books. This is the brief introduction of Professor Kabir Hassan. Now I would like to introduce myself. I'm Dr. Ahmad Imran Hajra, working as an associate professor at Ghazi University, DG Khan, Pakistan. I have over a decade teaching and research experience. I'm working in domain of corporate finance, corporate governance, energy finance, and risk management. And my friend Anam Shafiq, she is a lecturer in Arid Agriculture University. I'm thankful to her. She is providing she is helping as a technical, she is providing technical support. Now, I'm thankful to Professor Kabir for your time and for your time. And now session is over to you, followed by question answer at the end of session.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, Dr. Ahmed Imran, for inviting me to give this webinar on Islamic finance to the students, professors, scholars, brothers and sisters in Pakistan. Assalamu alaikum wa rahmatullahi wa barakatuh, and good morning. Rabbi shrah li sadri wa yassir li amri ahlul uqdatam min lisani yafqahu qawli. So let me, since it's very late here, in order to organize my thoughts and keep me on track, I'm going to pretty much follow what in this slide and sometime with interjection. So the title of my talk, the value-based Islamic finance and responsible finance. So in this talk, I'm going to bring the different aspect of Islamic finance and Islamic economic discipline and try to share some of my experience with it. So even before I start, there are frequently asked questions to us, those who work in the Islamic finance era. Now, the first question that we are always being asked is, what ethics had to do with finance? How can we expand our business without taking loans? Interest has become part and parcel of global financial system. It is impossible to have two systems of banking like conventional Islamic banks in one country. It is the same thing, only the names differ, interest to profit. So there is no difference between these two types of banking system. If we forsake dealing in interest, who will be left out of business? Who will be left out of business? And this type of thinking was suitable, good in golden days, but not in these fiercely competitive modern markets. It can only be applicable only Islamic countries. It is just a dream. It never can be a reality. So these are the questions that you always face by scholars, by friends, everyone. Now, if we look at the Islamic finance in terms of numbers, the last financial crisis that we had in 2008 and 9, the Islamic finance industry was managing funds roughly between $800 billion to $1 trillion. But if you look at the current crisis, the fund's value under Islamic finance management has gone up by 150% during this COVID-19. And we dream that industry will reach about the 20 trillion mark by the 2030. So it's 2021. in about 19 years. We hope to achieve that goal. Now the question is, having said this, what is the basis of Islamic finance? So we always talk about riba is haram, but what is riba? And how does riba is placed within the context of Islamic finance space? So let me give you a snapshot, Islamic Sharia, an overview. Islam, we say, as a complete code of life. It encompasses every aspect of human life. It provides directives, the roles as to how economic and financial activities should operate based on moral, not just the economic system. And the source of morality stems from Sharia. So if you look at Islam, so we have the Islam, and on one side we have the Aqidah, faith and belief. So the Aqidah, faith and belief is something between you and God, Allah subhanahu wa ta'ala himself. Nobody can really ask you a question about your Iman or Aqidah. It only knows whether you're a good Muslim, bad Muslim, you're a kafir, munafiq or something. On the other hand, we have the Akhlaq, morality and ethics, that is also enshrined in the Quran and Sunnah, but it is more or like in the society that you live in, social capital, etc., etc. In the middle, we have the Sharia practice, the roles that I'm talking about and activities. On the practice, again, it comes the spectrum of Ibadah. Again, here is a relationship between man and women to God worship, and Muamalat, man to man activities, or man to and women activities. So if you look at Ibadah and Muamalat, in Ibadah, everything is forbidden unless it's allowed. But if you look Muamalat, everything is allowed unless forbidden. So the Muamalat space is big, open for us. Everything is halal except few things. Now within the Muamalat, we have different types of activities. Political life is also part of Islamic way of life. Economic activities, your social activities. Within the economic activities, you have other economic activities and banking and financial activities. And banking and financial activities have taken the center stage in Islamic finance industry. So that's where all the questions are coming from. But what is the Islamic worldview? How do you look at our relationship with God and why we are sent to this world? The essence of Islam is Tawhid, oneness and sovereignty of God has many implications. Allah is the only source of value. Humans are created equal. Resources are transferred from Allah subhanahu wa ta'ala. Humans are Khalifa and we have free will. And Muslim is by definition who submits to the will of God. And will of God is expressed in revelation. So there are two main sources of knowledge in Islam. One is called revealed knowledge, is the Quran, which is unimmutable, and Hadith and Sunnah sayings and traditions of the Prophet ﷺ, which has been collected and assimilated after the death of our beloved Prophet. Actually, after 200 years of his death, it was taken a shape, the Hadith that we know. And also we have the derived knowledge fiqh through istihad. We have analogy, we have the isma or consensus, and analogy and isma are based on two basic sources of Islamic knowledge, which is Quran and Sunnah. Now, the Sharia, the revealed knowledge, Quran, is recited by the angel Jibril to Prophet Muhammad sallallahu alaihi wasallam, but Hadith and Sunnah is unrecited in a sense that it was the ilm or hope God has given or give him intuition and through which he has done things and said things, and that has become part of our faith as well. Fiqh, derived knowledge, Isma and consensus. So as I said, the Islamic laws can be broadly classified into two types. Ibadah, which is the devotional acts. Any worship which is not legalized by Sharia is null and void. Muamalat, dealings or transactions. Transactions are permitted unless prohibited by Islamic law or the principle of permissibility. In muamalat, new transactions or product or services can be accommodated through ijtihad as long as do not contain the prohibited. And what are the prohibited element? Is the riba and gharar. Now the riba, there are different stages in the Quran. Riba has been made haram, which is then the fourth stage, the final verse. O you who believe, be afraid of Allah and give up what remains from riba if you are believers. And if you do not do it, then take a notice of war from Allah and His Messenger. So any transaction, any element of riba in any transaction, if it is there, that is forbidden according to Islamic faith. But there are two types of riba. First riba is called riba al-nasiya, root word nasiya meaning to postpone, refers to the delayed payment riba when there is an exchange of the same specie over a period of time. The amount of exchange has to be the same, Qardul Hassan. If excess is paid over the amount, this will lead to riba al-nasiya. So this is what has been mentioned in the Quran, and a example would be if I give you 100 rupiah loan and ask 110 rupiah 1 month later, this additional 100 rupiah will constitute riba. Now riba al-fadl on the other hand, that comes from the sunnah of the Prophet. If there is exchange among the same of the riba goods, it has to be done on the spot and should be of equal amounts. If the amounts exchanged are different, that will be riba al-fadl. So riba al-nasiya, like riba in loan contract, as I said before, give out loan, principal sum, repayment include additional amount because of delay in payment. And this is the riba that has been mentioned in the Al-Quran. Riba al-fadl, again, riba in exchange between two contracts, based on the saying of the Prophet sallallahu alaihi wasallam, gold for gold, silver for silver, wheat for wheat, barley for barley, dates for dates, salt for salt, like for like, equal for equal, and hand to hand. If the commodities differ, then you may sell as you wish, provided that the exchange is hand to hand. So if we dissect this hadith in this diagram, so in this hadith there has been mention of 6 commodities, and out of the 6 commodities we can put them to 2 categories. One is currency, gold and silver. The other one is staple food, wheat, barley, dates and salt. So let's look at the type, function, role and example. Type same. If equal amount spot, so an example would be gold for gold, date for date, quality does not play a role. So these are of the same type, they have the same function, currency or exchange value. There has to be transacted equal amount on the spot. But let's take a look at the second example. The type is different, function is the same, and the role of exchange or engagement on the spot. That means you can sell gold for silver exchange, barley for dates, USD for SAR, and that exchange value will be determined by the market demand and supply, but that has to happen on the spot. But if the type is different, function is different, you can free to trade. Like for example, you can sell wheat for gold, and you can keep the gold, and then you can use this gold later on for goods, or Saudi Arabian Riyal or Pakistan Rupiah for goods. Now, if you look at, apparently seems to me very innocuous, that riba al-fadl and loan riba, but there is a very significant difference between these two types of transaction. Riba al-fadl, that property is a luxurious properties. Do you remember the famous hadith of the two types of dates in the market of Medina? And Prophet asked the Sahabi, what did you do? So he said that I changed two amount of low quality dates for one amount of high quality dates. And Prophet said that that is riba. You should have sold the low quality for this market price and use this market price for the high quality. But if you look at the loan riba, when you give a loan, It is a time-dependent property. You really need this loan right now, otherwise your life is at danger. The demand, who demands riba al-fadl? The rich people, because here brand name comes into play, is the quality of your clothes comes into play, the type of rice you eat comes into play. So the rich can afford the high quality rice than the poor, but the loan riba is always by the needy. Elasticity, riba al-fadl is a high elasticity. That means if price changes, then the quantity demanded will change very quickly. But loan riba, there's low elasticity of price. Regardless, whatever happens to the price, you need these commodities in order to survive. Price gap, the price gap in riba al-fadl happens exogenously, but loan riba, it happens endogenously, because if many people are poor, the loan riba will circulate and that will increase the amount of debt in the society. From the instability perspective, there's a low instability in the riba al-fadl, but there is high instability in the loan riba. That's why debt has been made haram in Islam on the basis of interest. So if you look at one more time, riba al-nasya, financing using loan contracts, no extra is allowed. Riba al-fadl, currency exchange must be in the spot transaction, and no further currency transactions are allowed. But we have done financial engineering, Sharia engineering, in order to create an instrument which replicate conventional forward contract. But that's a different part of the discussion. So if you have money, what is the purpose of this money? If you have the money, you can give the money as a loan to help someone. And you can ask for a guarantee that I'm giving you 100 rupiah, but you must return it back 1 month later. But I cannot ask anything for extra, and no extra. So if this person, so this is what we call Qardul Hassan. So in Islam, lending has always been a charitable act. So you cannot do any business transaction on the basis of loan or lending. You must get into a partnership type of contract, or you can save your money. So I have $100. I go to Andrea, my friend, I see in the audience. I said, okay, Andrea, you put this into your bank. So Andre said as a banker, okay, I give a guarantee, but I'm not going to pay any extra because I am safekeeping your money. It's not only that I should be paying Andrea for safekeeping my money. And you can invest your money. When you invest your money, you can get into a contract asking for profit or loss, but you cannot ask for guarantee. So look at, there are three ways you can look at money: as a loan instrument, a savings instrument, or investment instrument. So where does the riba comes into play? Any instrument that you see, any financial contract, you may ask, what is the riba? Just ask yourself this question, whether that contract simultaneously contains a provision where you're allowed extra and also given guarantee. If that happens, this is what we call riba from the functional standpoint that we can derive from the Quranic ayah and the Sunnah. Now, having said this, riba is haram. So what does Islamic finance bring to the society? It brings value and sustainability to society. So ethical finance, bringing value to society, creating sustainable and meaningful value to society. It aligns financial practices towards purposes that include social aspects. So it achieves social good while generating financial returns. Now, if you look at what are the internal value drivers of such activities, showing support for its employees, providing a healthy and safe environment if you work for a company or if you work for the university, examining entire supply chain and performing corporate social responsibility projects, discussing social and governance issues. Now, if you look at achieving social good while generating financial returns, how social issues are being addressed to optimize positive impact on society, economy, well-being, and development, and contributing back to the community. So the COVID 2019, 2020, and 2021 is a sort of natural experiment for the Islamic finance to show its teeth. When it's a social good, provision of specific goods or services aimed at benefiting the society, and practicing social good, it is a behavioral or societal outcome to achieve desired results. It includes dealing with the underserved, financial inclusion. It promotes economic development and also the social initiatives. So Islamic finance should engage in socially responsible activities to assist individuals or societies to enhance their living and environmental conditions. So it promotes trust, cooperation, and solidarity. It requires balance between individual rights and rights of the society and state. It does good, or doing good is encouraged, does not subscribe to encroachment on anyone's property rights. It advocates fairness. It promotes comprehensive human development. It stimulates economic activity and entrepreneurship while addressing poverty and inequality. So in Islamic finance and economics is compassion and cooperation versus greed and competition that we see in a market economy or capitalist system. Islamic finance also has social angle to this. We call this Islamic social finance, promoting and providing social good. So there are different instruments that we have. So we have the Waqf, is responsible for supporting and founding of education establishment. It's cited for supporting the founding and continued existence of many famous universities. Al-Azhar University is an example. And actually, Oxford University was framed under the Al-Azhar University, the foundation concept the West learned from Islam as well. Alms, Sadaqah, regular giving of alms is encouraged as a means of cleansing wealth. So the Holy Ramadan is coming from next week. So we increase our sadaqahs during the holy months and throughout the year. And zakat, which is a mandatory part article of faith, one of the 5 articles of faith in Islam. If you're wealthy and you have money above nisab, you must give zakat every year. And there are different rules of zakat or different types of assets. And you also cleanse of tainted income in prohibiting committing what is forbidden. Haram, in Islamic finance, a mechanism is in place for cleansing of tainted income by channeling them to charity. And this is what being practiced in the Islamic financial industry. If they get into haram activities, they cannot take this as income. They must give away these things to charity. So finance and environmental sustainability, if we look at ethical finance and Islamic finance, from the value proposition, it outlined in the stated intent, environmental sustainability is one of the goals. Climate finance is a very buzzword. Everybody is talking about this thing. In Islamic finance, the stated intent is expressed in the Quran and Hadith from the principles of vicegerency or Allah subhanahu wa ta'ala. Manner environmental sustainability achieved in ethical finance is a clear articulation on environmental consideration only began following the Bandusland Report 1987, which embedded ESG in investing, meeting the needs of the present without compromising the ability of future generations to meet their own needs. In Islamic finance, you do good and prevent harm by treating the environment in a fair and just manner. It's a moderation, avoiding wastage, excesses, treat every living being with mercy, duty of care to protect and keep safe for next generation. And each type of finance follows some methodologies. So different treatment processes, they use negative screening. For example, they are not going to invest in a company which pollutes the environment. They have an ESG integration. They will look at the environment, social and governance criteria within the operation of the company in which they invest. And there is also shareholder activism. Now in the Islamic finance, we have the sector screening, halal versus haram. We also have financial screening. So advancing the environmental sustainable agenda, there are different types of organization being um, sprung up in the economy in different parts of the world. For example, Global Alliance on Banking for Values, founded in 2009, it is a network of banking leaders committed to advance positive change in the banking sector, of which environmental sustainability is a stated goal, achieved through greater transparency and disclosure on assets committed to save the planet, and development of social responsibility reports. And to the best of my knowledge, none of these 300 banks, Islamic banks that I know of, has any sort of stated goal of environment sustainability in their operational menu, in their operational manual. Fortune 500 change the world list, identify 50 Fortune 500 companies that are committed to doing good. Areas evaluated include efforts to change the world by reducing damage to the environment. Then you have Dow Jones Sustainability Indices. Those who do empirical Islamic finance research, they use data a lot. Selects leaders across sectors committed to, among others, mitigate climate change. Selection is based on specified environmental sustainability criteria. Then you have the FTSE 4 Good Index. Environmental sustainability criteria form the part of the assessment in addressing ESG issues. The companies are assessed on environmental management and climate change, and targeted for impact investment. Capital is for a defined purpose. Measurable impact on environment alongside financial return on investment. This is what you call impact investing. Exclusion of investment that damage the environment. So Islamic finance, the object of environmental sustainability, is a detailed framework for assessment of the environment has yet to be developed, but is a developing stage. It can be achieved through set of core values. And what are these core values? The first one is adl, treat the environment just and fairly. Wasat, middle path or moderation, avoid wastage and excesses. Amana, trust and custodianship of the earth. And Rahma, treat every living human being with mercy, without regard to race, sex, religion, color. Explicit is negative screening to exclude activities that are harmful to the environment. So, key observations on key ethical finance and social responsible investing. So they adopt the ESG framework. So they have the own sets of screening methodology, financial institution, as I mentioned before, Global Alliance for Banking on Values, United Nations Global Impact. We have ethical and SRI related products and services. You have the Green Finance Initiative, SRI. You have the ESG related indices, as I mentioned before, FTSE Good, Dow Jones Sustainability Indices, and you have the ESG Green, ESG related capital market instruments. So you have the green bond principles or climate bonds. So there has been rapid growth despite adoption of non-uniform approaches. But if you compare the Islamic space, key observation Islamic finance, it consistently applied Sharia screening methodology, exclude businesses that harm with haram elements. So there are some specific mention in the Quran and Sunnah that is not allowed in Islamic transaction, like for example, pornography, alcohol, armament, uh, that really destroys environment, destroys human life, and so on. So ensure business is aligned with requirements of Sharia, ensure that it relates to or leads to ensuring the financial and other operational aspects are conducted within the permissible limits. So it's a development of complete and comprehensive Islamic financial system. So on the one hand, you have the institution, including banks, takaful companies, fund management companies. You have the instruments, including sukuk and different types of Islamic mutual fund. You have the markets, Islamic financial market, Islamic capital market, and Islamic equity market. And of course, you have the Sharia compliant indices. And this is growing rapidly with consistent approach. And the growth rate in Islamic finance industry is double digit and more than twice the conventional finance industry growth. Now that brings to a third issue, the Islamic finance bringing financial stability in the society. So how does it happen? You know, we had this 2008 and 9 financial crisis. So, and recently the pandemic, which is a health crisis, but then it spilled over into financial and real economic crisis. So the global response to the recent financial crisis 2008 and 9. So what happened? They did a lot of regulatory reforms, a lot of laws and regulations has been brought up into different countries. You strengthen the supervisory oversight. You have the forward-looking surveillance. You have the resolution and crisis management capability, and you have the advanced macroprudential tools. So the enhanced role of regulators in imposing discipline on financial industry towards achieving financial stability. So ethical finance contributes to financial stability, but how? Because because anything that it does, it has longer term orientation, so it avoids short termism, it avoids short term transaction, it avoids high risk speculative activities. The governance process in ESG framework it adopts. It has a high degree of disclosure and transparency. And of course, its emphasis on ethics, culture, and values, elements of ethical finance that contribute to financial stability. Now, Islamic finance, how does it contribute financial stability? Elements of Islamic finance that contribute to financial stability, for example, requirement that financial transaction be supported by real economic activity, profit and risk sharing, hence built-in risk management. There has to be a robust governance process, both corporate governance and Sharia governance. There has to be embedded transparency and avoiding speculative or illegal activities. So there are also further distinctive elements of Islamic finance that reinforce the financial stability agenda. Islamic finance, a comprehensive financial system with a centralized assessment arrangement to ensure its consistent application. How does it happen? The Sharia forms the foundation for operation of financial intermediation, exists as a complete and comprehensive financial system, and of course, this is overseen by the Sharia board or Sharia governance. Now, there are sustainable development and regulation standard for financial stability. So different organization is supporting this, international financial standards and sustainable development. Generally, SD has yet to be explicitly considered, but nothing to prevent regulators or financial sectors to act consistent with this sustainable development. Financial inclusion, strengthening ethics and culture, environmental sustainability have drawn recognition. You have the elements incorporated by regulators, financial inclusion and climate change, introduction of the principle of proportionality, and the potential role of international supervisory structures. So you have the BIS, you have the Financial Stability Board, you have the IMF World Bank. IMF reports on observance of standard and codes and central bank's own initiative. So the regulation standard for the financial stability that relate to Islamic finance directly. You have the Islamic financial architecture exists for financial stability, like Islamic Financial Services Board, AAOIFI, and some form of consistent in practices exist. So AAOIFI is trying to bring up, accounting, Sharia, and governance roles that can be adopted and applied by financial institutions all around the world. Culture and ethics underpin the Sharia compliance. Practices may be divergent, but fundamentals are consistent and to large extent convergent. And international supervisory structures subject to similar requirements of Financial Stability Board, Bank for International Settlement, BIS, IMF World Bank Financial Stability Assessment, and IMF reports on observance of standards and codes. So since Islamic finance is a growing industry, World Bank, IMF also provides different types of support for the growth of this industry. So Islamic finance and ethical finance share a common core values, a common set of values, both as long-term orientation and sustainability. It emphasizes the financial inclusion, emphasizes on ethical values, economic well-being for everyone, and preserving and promoting interests of our next generation. So, but where is the difference between these two? Ethical finance, priority to the environment, adding value to the society, On the other hand, Islamic finance strongly anchored to the real economy and strong built-in elements of financial stability. Of course, within this thing, ethical finance does not explicitly prohibit interest and gharar, but Islamic finance does so. So what are the strategies and approach? There is screening mechanisms followed by Islamic finance operates a Sharia screening methodology, as I mentioned before, that is consistently applied. Those who do empirical Islamic finance, they're familiar with this thing, and we use different data set in order to analyze the performance of Sharia compliant product. Ethical finance adopting ESG consideration, wide-ranging screening process to assess its adoption, ensuring fairness and inclusivity, both adopt principles of transparency, disclosure, and governance practices. Now, there has been a study done by one entity. Now, the question was, can ESG significantly improve performance? So it has been found if financial institutions include ESG into its activity, it has been found their 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 performance is 6% higher for the Sharia compliant financial companies and 10% higher for Sharia compliant non-financial companies. Now, so there is a convergence point between Sharia and ESG screening. Me and Andrea has a number of paper in this area. So Sharia and ESG screening show some correlation. We combine these two can improve overall risk-adjusted returns. Greater focus on ESG-specific screening on top of Sharia screening would minimize risk for such exposure. So how the ESG qualities of Sharia-compliant companies? Previously, it was presumed that Sharia compliance methods prefer governance. However, analysis of investable equities that we have and other people have done reveal that preference is more towards environmental and social dimension. Data on ESG scores of Sharia compliant and non-compliant companies demonstrates that the Sharia compliant companies tend to receive higher scores than non-compliant companies. ESG performance of Sharia compliant companies tends to be highest in workforce scores, corporate social responsibility strategy, and human rights score. And Islamic banks definitely can benefit from including Sharia compliant companies with better scores in better ESG scores in their portfolio. So Islamic financial screening methodology has found so far negative screening. So you cannot have such and such, you cannot invest in haram activities, but they did not so far put emphasis on the positive screening. Not only a company does not engage in the Sharia prohibited activities, but also it treats its employees good, it has good remuneration package. So those type of activities are called positive aspects. And so Islamic financial companies or Islamic companies has to or organization have to put these ESG factors into their operation to make it more convergent with the ethical or investment finance. So companies in real economy get a bigger ESG leap from Sharia compliance screening. The environmental score is being boosted by the presence of companies that are developing innovative technology to address environmental issues, so-called green technology. The improvement in social score may be driven by the sector exclusion screens which avoid companies dependent upon products that harm humanity. And the financial ratio screen may also help avoid companies whose reliance upon debt may drive their focus too much towards the short term at the expense of long-term environmental and social sustainability. So obviously there is a link between ESG, Sharia compliance and performance. Both Sharia compliance screening and ESG screening create portfolios with similar characteristics. So combining both screens can add significant new information. And Islamic banks face indirect environmental risk based on types of economic activities they finance. And they can factor in environmental and social risk into its changes to reduce risk exposure. Also, it can influence clients to adopt mitigation techniques. So we have done a number of empirical research. If you look at just quickly on just the data, We have looked at a bunch of Malaysian companies, 200. We applied qualitative screen, and we find only 139, about 70% of these companies drop out on the basis of qualitative screen. Then when we apply qualitative liquidity screen, 40% drop out. So more than 2/3 of the companies comply with the qualitative requirements, whereas only 1/3 comply with quantitative screen. The introduction of EEI, ethical investment, and CSR dimensions in the Sharia compliance does not significantly reduce the Sharia compliant investment universe, since about 70% of companies are still Sharia compliant. So this should help boost investor confidence. The majority of companies, however, have been screened out because of quantitative financial screen, and after adopting a mere restrictive format by adding three dimensions, qualitative, liquidity, interest, and debt, only 19% of the companies are Sharia compliant. Now, we also have another paper in JCF. We asked the question, the CSR of Islamic level firms, issues with the threshold-based classification. So we have all these financial screens to do work in Islamic finance. You know, debt ratio cannot be more than 33%. Interest income cannot be more than 5%, etc., etc. But all those thresholds that we use in empirical or in practice, there's a lack of religious-based support, there is internal inconsistency, there is misclassification error, and the claim that Islamic compliant investments are more socially responsible, there is no empirical evidence such that it could be significantly affected by how the compliance with the Islamic law is measured. So what we have done, we have come up with a sort of an I score. We call the Islamic score. So we created some sort of framework in order to define the violations. So V is a violation score. We use 4 different violation scores in the version of the score: leverage ratio, cash ratio, receivable ratio, ratio of sales from non-permissible, all defined using DJI index method. So alpha is a weight variable that could be used to assign different weights of 4 different violations on the severity. Alpha equals 1 in this measure because we treat all violations equally. So what we find by creating this index, 3 conclusion: stocks that are level compliant by Dow Jones Islamic Index do not have higher CSR score than non-compliant counterparts. There is no empirical support to the common belief that Sharia compliant investments as they stand now are more socially responsible. However, the index style I score, Islamic score, is superior to the traditional threshold methods in capturing the linear association between corporate social responsibility and the elements of Islamic Sharia screening. An Islamic financial institution and Sharia compliant funds can better fulfill their promises, a more socially responsible use of investors' money by constructing portfolios using indices such as I-score, as we have developed in this paper, instead of the threshold-based classification methods such as those employed by Dow Jones Islamic Index and then other institutions. So that brings to our fifth segment of my talk is Islamic finance and SDG. If you look at, we have all sorts of problems in the world right now. 1 in 5 people still lacks access to modern electricity. 836 million people still live in extreme poverty. Globally, 1 in 9 people in the world today, almost 800 million people, are undernourished. 103 million youth worldwide lack basic literacy skill. More than 6 million children still die before their 5th birthday each year. Water scarcity affects more than 40% of the global population and is projected to rise. And about 828 million people live in slums today, and the number keeps growing. So given this, how does the impact investing can help? So what is the definition of impacting? It's an investment intended to create positive impact beyond financial return. So these investors provide capital, business designed with an intent to generate a measurable outcome, and of course, they expect a financial return on their investment. So this is not charity. So as I said before, there has to be intentionality of impact, and investment must be made with the explicit intention that the investment have a positive social or environmental impact. It has to have a financial return. The investment has a return on capital and thus is not an act of philanthropy. There's a range of asset classes. Investment target a rate of return somewhere between below market to fixed adjustment market rate across asset classes, and it measures impact. The investor must be committed to measuring the social or environmental impact of the investment. So impact investment is intended to generate positive, measurable social and environmental impacts along with financial returns. The emergence of impact investment, social and environmental, as a financial market is relatively recent, despite a long history of social economy. Key drivers behind the emergence of impact investment include the changing investor preferences. People prefer more social goods, demographics, changing demographics, the old versus younger generation, and the changing long-term risk models. However, the impact investment market is still under-institutionalized, lack consistent terminology, consolidated data performance, or regulation. So if you look at the sustainable investment spectrum, so if you look at, I'm involved with the Oxford study, faith-based initiative. So this is some sort of preliminary result. So if you look at impact only one side, on the other side you have the ESG. So about $75 billion is in the grant industry. You have 134 billion is impact, 270. So on the top is the grant. There's 100% rate of return, negative 2.5% on the impact. So it goes all the way to ESG, which has a return of 12 to 18%. So if you look at this next slide, so we have the grant, estimated market size of 75 billion, approximated as 5% of total foundation assets globally. And PRI also include in the 5% grant allocation. MRIs could potentially equal the assets of all foundations, approximately 1.5 trillion globally. And impact investment using survey published in 2020, GIIN, estimated the core impact investment market size is about 715 billion. Then you also have the development finance, the 25 HIP as signatory development finance institutions estimated there is a total asset in this space to be $724 billion. And the expected discount rate of return of this developed finance is about 10%. And finally, we have the ESG finance in 2018. More than half of all global assets under management followed some form of ESG with a market size of $54 trillion. So the evidence suggests that over 95% of ESG is negative screen based. So how does this connect with other religion? You know, there are three monotheistic Abrahamic faith. The Christianity, does it have any role? Does the faith play any role in ESG or impact investing? Definitely so. If you look at the Christianity can take its investing principle from both the Old and New Testament, providing guidance of where one should invest or not. Impact investment is supported by Christian stewardship, is consistent with principles laid out in encyclicals such as the common priority to address care for the planet. In Judaism, has a clear set of specific roles for conducting of financial and commercial activities. Within the stated values are clear justifications for impact investment, the drive to act intentionally to make positive changes to society. Then in Islam through the Quran and other texts lays out a set of rules concerning investment more than other faiths and enough for a separate system of finance. Islamic scriptural support for impact investment comes from the explicit responsibility for Muslims to preserve the earth as its stewards as stated in the Holy Quran. So the other Dharmic principles like other faiths like Hinduism, Buddhism, Jainism. Dharmatic principle emphasize environmental stewardship, sustainability, improving the general welfare of the world. Therefore, it may be considered dharmically correct for an investing entity to invest in those opportunities that also provide for the betterment of the environmental society. Buddhism stresses the idea of right livelihood, doing business without causing harm or violence to others. Ideally, decision making would be made using an integrated framework of mindfulness, concentration, and wisdom. And two principles that guide the Sikh views on finance and wealth creation are Dharmashal, the pursuit of social justice and social responsibility, and Rehat Maryada, the Sikh code of discipline. As such, investing in stocks and shares may not appeal to many Sikhs. Impact investment, however, aligns with this principle very well. So if you put this in a table like this, if you look at all these 7 religions that I mentioned, the Christianity, Islam, and Judaism, they have specific principles on investment from their religious text. If you look at the principles from which investment principles can be derived, Hinduism, Buddhism, Sikhism, even though they do not have a specific principle in their religious text, but it can be derived from their text. But when you look at the principles that support impact investment, all religions converge. They can come together and talk about doing good to others and avoiding harm. So Islamic financial tools for SDG, we talk about financial stability, I mentioned financial inclusion, you reduce vulnerability, societal and environmental activities, infrastructure finance. So this Islamic finance is a non-traditional source for SDG financing. The major principle, financial stability, financial inclusion, shared prosperity. So the global assets estimated to be 3.2 trillion in 2020. It emphasizes on the risk-sharing finance. It emphasizes the linkage to the real economic activities, and most of the products are partnership-based. Wide geographic reach, Asia and the Middle East, with expected rapid expansion of global assets in Muslim and non-Muslim countries. So the comprehensive Islamic finance solution is supporting SDGs. So you can put into different categories of these 17 SDG goals like infrastructure development and capacity building. So there are 8 different SDGs goals that can fall under this category. And what are the Islamic finance mechanisms that can be used in order to address these SDG goals? The raising wholesale funding mainly from the Sukuk program or syndicated Islamic financing platform. Then you have the social development. 6 SDG goals can fall under this category. And this Islamic social and financial inclusion, the Islamic social finance, can be used in order to address the 6 SDG goals: Zakat, Waqf, Islamic microfinance. It promotes innovation and achieve efficiency. The 6 SDG goal can fall under this category. And how the Islamic finance can promote or enhance these SDG activities through Islamic private equity, venture capital, equity funds, crowdfunding. So we need innovation in product development in Islamic finance. So here are some Islamic impact investment tools. So impact investment fund type, you can use crowdfunding instrument that can use Islamic crowdfunding instruments, impact enterprises crowdfunding platforms, and sample results of beneficiaries. It are the micro enterprises who can benefit from this crowdfunding platform, Islamic crowdfunding instruments. Then you have the green investment. We hear about a lot of green sukuk, and the which industry tries to impact renewable energy enterprises and sample reduction in carbon emissions. Microfinance, Islamic finance, microfinance the tool, and who are the impact enterprises, microfinance institutions. It also brings financial inclusion. You can have insurance coverage for the poor, micro takaful, and micro insurance are there, and that is used very often in microfinance. And the who are the beneficiaries, it reduces risk or it's a risk mitigation technique. Social investment, SRI Sukuk, government programs, inclusive business, social business. It has improved access to health, education, and etc. SME finance, entrepreneurship development. You can use Musharaka instrument, SMEs or micro SMEs, and it definitely helps development, entrepreneurship, or livelihood improvement. And finally, you have the value chain, Islamic venture capital finance, trade finance, and the type of enterprises that it can impact is cooperative, inclusive business, and it generates employment. You know, this 80% of the industry or the financial the organization in the Indian economy are SMEs, and they generate also 80% of the employment. So some way the Islamic finance has to address this area successfully, but so far it has not been able to do so. Finally, I know you're getting tired. So why you want to study Islamic finance is a value-based alternative. So what are the foundational principles of Islamic finance? To recap, it's rooted in divine law and it prohibits harmful transactions. It promotes economic justice, adl and ihsan, and it provides economic justice for all humanity. It circulates wealth. It does not concentrate wealth only among the rich. And interest concentrates wealth. Commoditization. So every Islamic financial instrument has to be tied to some sort of activity backed by real assets for real growth. It's a risk sharing principle. Do not transfer risk to the other. So if you do this, and if you want to compare two systems, a system based in debt-based economy or lending, a system based in ethical equity-based economy. So what is the end result? In a lending-based economy, it's a win-lose framework or zero-sum game. But investing in an ethical equity-based economy is a win-win framework or a positive sum game. Now, in a debt-based economy, it creates debt, proliferation of debt. As of today, just I got this figure today. Do you know what is the amount of debt worldwide of percent of GDP? It's about 400% debt relative to GDP that is behind it. So the financialization, debt creation, it definitely creates inequality in the system. But equity-based system, it invests in real assets. The debt-based system, risk is transferred from one party to the other party, but in equity-based system, risk is shared. Now, debt-based system, unfair gains from profit and losses, but in equity-based system, we have just and fair profits and loss sharing. Now, in a debt-based system, income inequality increases, rich gets richer, poor gets poorer, but in a equity-based system, we have justice and equity. So this is a figure, you know, it's kind of old, about 10 years old. Do you know what is the total value of foreign currency transactions? It's about 1,000 trillion. Value of financial derivatives traded 601 trillion. Value of shares, bonds traded 87 trillion. But the global GDP in 2010 was only $63 trillion. What does it mean? The fictional financial economy is over 26 times larger than everything else produced on earth. So the debt-based or interest-based financial system produces debt, it creates inequity, and that's where Islamic finance comes with an alternative, interest-free and partnership type of financing. But it is an Islamic finance, a comprehensive framework. So you can mobilize resources, you can look at different sectors and Islamic financial services ecosystem. So let's look at if the corporation, high net worth individuals, affluent individuals, upper middle class, middle class, and they can engage in the Islamic financial institution SMEs, they can use Sukuk instrument equity funding. But there are also the lower middle class and hardcore poor. How do you reduce the gap? So lower middle class, and you can use microfinance and micro takaful, and hardcore poor, you can use Islamic social finance, zakat and akaf, sadaqah and qardul hasan. So you are combining commercial finance with social finance and Islamic financial ecosystem in order to achieve the maqasid of Sharia. Now, many people say that which way the Islamic economics finance are going. Those are studying this area. It is for the students. There's an idea about from Dr. Salman Saeed Ali. So there are 7 ways you look at this thing. First one, if you look at any curriculum of any university, you add Islamic elements within the conventional system. So you take a conventional framework and you try to add Quran and Sunnah, and you try to write a paper, you try to tell we are trying to Islamize this. Second one, work on institutional change, because Islamic system calls for different institution, so-called institutional framework. Number three, you work on social finance instead of commercial finance. Some people say that forget about the bank system because that is like conventional banks. We should really focus on Islamic social finance, try to develop this industry, zakat, waqf, sadaqah, microfinance, Qardul Hasan, and so on. Number four, work on environmental issues and circular economy, because this is closer to Islamic finance. Number five, you can work on Islamic moral economy at the philosophical level. Number six, you create new paradigm by rejecting everything conventional and build on different mindset. And number seven, focus on ways to address social and economic challenges using Islamic principle. So if you look at how does the framework of Islamic finance work, the problems in conventional system, as I've been saying, there's unemployment, there is poverty, there is inequality, there's debt burden, instability, social effects, and design principle of Islamic finance, not money for money, diversity of product and financial inclusion, and multiplicity of channels. So Islamic finance will lead to through private sector, through public sector, through voluntary sector, and ultimate impact is the socio-economic development. So last two slides. So what are the challenges facing Islamic finance industry? Of course, you have to develop appropriate legal, regulatory, supervisory Sharia framework. A lot of work has been done to different support organizations that exist like AAOIFI, IFSB, Islamic Development Bank, Central Bank of different countries. Then you have the managing the liquidity Islamic financial institutions. It's a big problem. That industry is still underdeveloped. So we do not have an Islamic benchmark rate. You know, the LIBOR is going out at the end of this year. So AFI is working on developing alternative to LIBOR, an Islamic LIBOR benchmark. And we are right now working on this, developing these guidelines and rules. Continuing development of financial products that have positive impact on the economy, not just to mimic the conventional financial product and Islamize them. You really want to do a real Islamic financial product which are based on profit and loss sharing. You develop economic microfinance poverty elevation. You develop the AUCAF sector income generated from AUCAF and the capacity building of AUCAF institution. There is one estimate there are about $200 billion worth of AUCAF assets lying around the Muslim world. If we can effectively manage them and generate return, that return can support huge development projects of many countries. And commitment to apply Sharia accounting and supervised standards issued by a specialized institution. So there are four things we need to do. And that I promise that is my one of the last slides. Communication gap. There is still misconception, misunderstanding, and misplaced notion about Islamic finance must be removed through awareness and advocacy program. Trust gap. Social business and impact investing should be emphasized to remove tensions among the stakeholders of the Islamic finance industry. Innovation gap, balance between macro and micro maqasid should be maintained. The so-called form versus substance or financial engineering, a balance between these two. This is the maqasid of Sharia. Talent gap, a new brand of scholars who are well versed in Islamic jurisprudence and secular financing. I call them 2-in-1. And right now it should be 3-in-1, not only Islamic jurisprudence, secular finance, they also have to be good in technology. So this type of new brand of scholars we need to create, generate, teach them in order to take over or promote the Islamic finance industry by providing leadership. So finally, so we are talking about paradigm shift here. Conventional, as I said during my presentation, there is instability. From instability, we want to move to stability. From deception and fraud, we want to go to transparency. From deregulation, we want to go to regulation. We want to regulate or give codes of behavior so that everybody behaves and for the common good of people. And value neutral, but we want to promote this as a timeless values which are very much present in every faith tradition. I acknowledge writings of various authors over the years from which I have benefited immensely and whose ideas I mingled with mine in this presentation. And these are some of the references that I've used in order to make my presentation today. I have 3 books recently came out, actually 4 books, and there are some articles you can take advantage of in order to supplement what you have listened to me by reading more into this area. Thank you very much for listening to me. So I want to stop sharing, and I think we still have a few more minutes. If you have any questions, I can answer it. You are muted. Ahmed, you are muted.
Yeah. Thank you very much, Professor, for your valuable information, and it's a very informative session. Now we have question answer session. If any of the participant has question, they may raise their hand. Here is a participant, I think, Irij Sadiq. Can you unmute your mic? Irij, you there? Irij, can you hear us?
There. Can you hear me?
Yes.
Can you hear me? Okay. Sir, I have a question.
Sure.
That about agriculture finance and Islamic banking role.
Well, you can use, salam has been used during time of the Prophet, and also there's a huge field experiment in Sudan. It has been used very effectively. So salam type of instrument can be used in agriculture. And I know Pakistan is still an agriculture-based economy. So the question is, the banking system that you see, they always cater to the rich people, even Islamic banks in Pakistan. Corporate finance, corporate banking is their core. They are not really very much engaged, this core of the economy, because these are too risky. And I do not blame them. Let them be Islamic bank, a bank, provide short-term financing, but they can get into some sort of salam financing, a certain part of their portfolio in order to promote the agriculture financing the Islamic way. So it can be done, sister, it can be done, but we need the willpower to do it. I see there is a question from the chat box. We find CSS sustainability reporting is not common among Pakistan firms. So it is all regulation. If the central bank or the regulator say that every bank has to submit the CSR activities, they have to comply with it. So it's simply lack of regulation. And if you have a efficient regulation, they will be forced to comply with this requirement. Then you can, compare which bank is doing their corporate social responsibility or not.
Any other participant have a question? I think there is Bismar. Bismar, can you unmute your mic?
Sir, Assalamu alaikum.
Walaikum salam.
Sir, I have a question about corporate social responsibility reporting and disclosures.
Mm-hmm. So what is your question, sister, specifically? You are saying that it is not uniform among different types of companies, or both financial, non-financial, right? So if it is not there, so it has to be mandated by law, regulation, that all companies should, in their annual financial statement, should report that activities. So that will be a sort of shareholder activism. The shareholder can force them to do the right thing, to do good to the environment and so on. There's another question I say, why should Islamic banks give priority to agriculture development? Well, I'm not saying the priority, but okay, there are two ways of answering a question. First of all, Islamic banks, as I believe, because of the structure it has taken from conventional banking system, fractional reserve banking, it is not really capable of providing long-term finance. So they have to be confined to the short-term finance. And the short-term finance out of the salam can be a short-term financial activities. And Islamic banks, part of their portfolio can be provided to that sector, because that sector turns out to be, the food basket of Pakistan, that is providing, keeping your country alive. And there is a significant percentage of the population working there. So from that societal perspective, I think Islamic Bank should really pay attention to this sector. Not necessarily priority, because it cannot do a priority, because it is incapable of providing or doing or taking high risk activities. Because salam financing, if something happens, a earthquake in Pakistan or heavy rain or flood, then the agriculture produce is being affected. And so Islamic banks are not naturally capable of stomach those kind of risk. So we are talking about allowable risk that a financial institution can take, a bank specifically, because they have a fiduciary responsibility to their depositors, but they can still allow part of their portfolio providing salam financing. So that's what I meant by this. Okay, Professor, please let us know about the role of microfinance banks and financial inclusion in Pakistan. Your country has some, while I originally come from Bangladesh, actually I'm your ex-brother. We used to be one country. Now we're two different countries. Now the microfinance started from Bangladesh, Muhammad Yunus, but that microfinance Grameen Bank is based on Riba. You hear all the stories about, empowerment women, the high repayment rate and so on, but you do not hear the dark side of it. Because of microfinance based of interest, it has entered nook and corner of entire Bangladesh. Now, majority of this, about 25 million borrowers, are now taking loans on the basis of riba. And what Allah said in the Quran, Allah has forbidden riba and allowed trade, and He has declared war against riba, right? So one good side you hear, but the bad side is that the interest that is spreading throughout the society. So as a counter, the largest Islamic bank in Bangladesh, called IBBL, Islamic Bank Bangladesh Limited, has come up with Islamic microfinance scheme. And actually that scheme is the largest Islamic microfinance in the world. And they are using the banking resources in order to, it's not freebie, it's not a philanthropy. So they are providing this financing on the basis of Islamic Sharia, albeit is mostly in Murabaha type of finance, but still is Islamic, is tied to a activity, is tied to a product and so on. So in Pakistan, on the other hand, has also made a very big name, is Qardul Hassan, Akhwat. We have never looked at the benefit to Hassan. Allah has said in the Quran that you give loan and somebody cannot pay it back, I will pay you back in the Akhirah. So we can design scheme, and Akhwat is another success story. If Muhammad Yunus can get Nobel Prize for doing microfinance, one day, Dr. Amjad Said, the founder, should get it. We also have to look at this Waqf. Historically, it has been a great source of revenue generation for us. We have to use the instrument zakat collection, distribution, but we are failing in those Islamic social finance area. You have to really promote those industry in order to reach to the entire population of the country and achieve the maqasid of Sharia. There are 5 goals given by Imam Ghazali. What as a young star and future Pakistan should do to change the Pakistan banking system, Islam banking system? Well, you had a constitutional requirement. Then Musharraf came in and he changed it. So you have a dual banking system. You see, in Pakistan, at least you have some rules and regulations to guide the Islamic banking industry. Still, your Islamic finance framework is probably less 10 to 15%. In Bangladesh, we do not have an Islamic banking rules and regulation. We have achieved the 30% of the market. So consumer want Islamic finance. They want to lead their life in Islamic way. So we have to have an option for them to lead their life accordingly. So, your constitution, Islam is the state religion. I don't see any problem of doing this. Internally, you run the entire system in Islamic way. With the external on the basis of doctrine of necessity. You can do international transaction because you cannot avoid it. You have to do an interest-based system. It is a political will. And so I believe Imran Khan, the rock star of Pakistan politics, the former captain of Pakistan cricket team. I think he has a good intention, and I heard him talking in the United Nations. We need leaders like them, like Imran Khan or Recep Erdogan in Turkey. We need a leader like Mahathir Mohamad. If we have like few 10, 20 leaders like this in Islamic world, we can change substantial, bring change to the Islamic community all around the world. And this ummah, you know, you have to remember one thing. Islam has given to us as a gift from Allah subhanahu wa ta'ala. If we do not practice it, follow it, Allah is going to take it away from us and give to other people. You know, you talk about religion practicing. I live in a state called Louisiana. It's one of the southern states. It's a red state, means 80% of it's a Christian, born again Christian state. And they are like born again, you know, white supremacism, those kind of things. Even in state, I do not have any problem following my religion because they enshrine the religious right protected by the Constitution. So people behave with each other in a very transparent way. There is no fraudulent, there is no gajakuri, you know, that we see in our society. You see Islam being practiced in America or Europe, but Islam is not being practiced in Muslim majority countries. So as a result, one guy, I forgot his name, said that when I go to France, I see Islam there, but no Muslim. When I come back to my country, Egypt, I see Muslims there, but no Islam. So we really have to go back to the tenets of the values of Islam. We should stop preaching and start practicing. We are good in preaching. If you go to, you know, all this big mahfil or khutbah during Friday prayer, and as soon as get out of the mosque, we forget everything. We really have to live our deen life in our practical and personal life. And it is not difficult. If I can do it living in the United States, you brothers and sisters can do it in Pakistan as well. You should not be ashamed or that you're a Muslim. Many times we feel ashamed to tell ourselves, what's wrong with it? Allah has made us one of the last ummah, has given us an ideal for the rest of the humankind. And we should keep this in mind. Okay, there's another question, sir. How is audit quality related to ethical finance? Of course, I mean, first of all, you have to start with what are the areas that you have to check, right? So now, in order to check the areas, you have to have some guidelines that everybody follows. So let's say you are comparing A and B. There are 6 dimensions, or let's say ESG, environment, social, and governance. And each dimension you have, let's say, look at 3 factors, and it has to be mandated for everyone for their annual reports. So when you do audit and you check their activities, then you can come up with a audit quality. Again, I'm auditing, but the audit quality, it depends on the person who is doing the audit, right? If you are a bad person, your audit quality will be bad. If you're a good person, your audit quality will be good. And nobody can bribe you, can write a wrong report on the basis of money. So we have to really spiritually purify ourselves. Otherwise, everything that we talk about is not going to work. So there are 2 types you see. One type are always, with the ritualistic, real following religion, are very, very particular, methodological. But when it comes to fiqh muamalat or personal life, social life, they are deficient. The other part, they are very good in social life, but they're deficient in spiritual life. We have to, that's why Islam says the middle of the road. Allah has made this middle ummah. I'm saying the middle, always in the balanced nation, so that we can show ourselves as an example to the rest of the ummah or the community in the world. But we are not doing this. If you look at a Muslim, all the bad names come because of our activities, right? We are not living an Islamic life. So how can you do this Pakistan Jindabad, Islam Jindabad? It's not going to work. You know, you have to understand, learn, and practice in your personal life, in your social life. Then everybody will look at this and look as an example. They will try to see what it is, because Islam has been preached in the world through practice. You know, those who preached Islam in India, for example, or Southeast Asia, you know, they have gone there. They'll take Islam and they'll show in their public life practice that this is an alternative they can take, or whatever there existed, you know, before their arrival. So keep this in mind. Learn from Islamic history. You know, we have a rich tradition. We should not be feel poor. We are not really a poor nation. We have a very rich heritage, but the question is, you are not. But we are not at a contradiction or fight with other faith tradition, because we have to respect their way too. We have the Quran and Sunnah. Islam, from my understanding, is a very secular religion. You know, we say that lakum dinukum waliyadin, but not many other religions say that lakum dinukum waliyadin. So let them practice them, and whatever the convergence point is, try to cooperate with them, and Islamic finance is a convergent point. As I said during my presentation, all the major 7 faiths that I talked about, they converge on this impact investing, ethical finance, responsible finance. So we can cooperate with each them. And actually, if you look at, for example, in Malaysia, you know, Malaysia, the investment side of Islamic finance, 70% of the taker, those who use Islamic financial product, are non-Muslims. So they are attracted to it because of the beauty, transparency of the product, and so on. So stop preaching, start practicing. We really have to practice. We really have to balance our life between spiritual and practical. We cannot really give up one for the other. If you do that, it is doomed for failure. You know, this famous hadith, you know, one person said that this guy, you know, always spends his time in masajid, and our prophet asked, what, so who takes care of his family? He said, he, you know, the answer, I don't remember exact narration, has relatives take care of him. He said, no, this is ibadah is not going to be accepted to Allah. After he prays, then he should spread around the zameen or the world, you know, to earn the livelihood. And entrepreneurship has been promoted in Islam. Islam is by nature is an entrepreneurial religion. Okay, what are the hurdles and difficulties that Islamic Bank is facing in Islamic countries, especially in Pakistan? Well, I don't see there is any hurdles. It's you. If you have an account today, after hearing my talk in conventional bank, you just take your money out and put in Islamic Bank. And also be a social activist. Tell the Islamic banks they have to come up with different types of product. If you're a student, you want to study engineering, or you want to go for higher education, tell Islamic banks to give you an education loan, because they are not, this is a social responsibility. So Islamic banks are in that spirit. I do a lot of empirical work. There is very little difference of the practice between Islamic bank and conventional banks. They do mostly Murabaha banking and target towards corporate customer, whether it's in Pakistan, Bangladesh, anywhere in the world. And I do not expect them to do more than that, but do whatever you do it right. Your product, try to come up with original product, not just financial engineering, mimicking conventional banking product. Because if you do this, you will become a follower rather than a leader. You want to lead, you want to show the others that Islamic finance or banking can be an alternative to what you're doing. It is a superior system. And if you cannot show this yourself through your activities, how do you expect others to follow you?
I think question and answer session is over, and we have done with our assigned time. Here I would like to thanks our participants, as well as Professor Kabir. I'm extremely thankful for your valuable time, and it's a really informative and productive session. And at the end, if you want to conclude or anything, then we can wind up the session.
No, thank you. I think you have heard enough from me for an hour and 30 minutes. And thank you for attending and listening. And I hope you'll take some message from my lecture. And if you're a student of Islamic Banking and Finance, try to understand, learn it properly. And if you are just a Pakistani citizen or a professor, try to follow the maqasid of Sharia, try to lead your life in Islamic way, and you'll see there's a lot of barakah. Allah will bless your activities and so on, and have a balanced life,
Thank you.
not extremist. Thank you very much.
Thank you very much for your lecture, and it's very insightful. God bless you.
Thank you.
Assalamu
Assalamu
alaikum.
alaikum. Good night.
Allah.
Good morning.
Good night to you. Good night to you.
Good
Thank you very
morning
much.
to you. Assalamu alaikum.